Hello, hello, everyone. Welcome to our live for tonight. I'm going to go ahead and head on live in the Facebook group as well. So bear with me. Bear with me. Bear with me. Welcome, welcome, everyone. I have a really amazing training, and we're going to do a Q&A as well tonight. So I would love for you to chime in, say hello, give me a heart, let me know that you're here, that you can see me in all the places. Let's take a look at the Facebook group. Okay, I see a few of you are joining. Welcome, welcome, doctors. We're going to figure it out, guys. We're getting it together. It's all good things, all good things. This is one of the ones. Oh, yay. I'm getting a thumbs up. All right. So this is one of the trainings I would highly recommend that you take your notepads out because we are going to dive all the way in. We are going deep today, okay? So this is something that's kind of near and dear to me. A lot of members of our community have been asking, about optimizing their property, about market saturation. So to make sure that we cover all the things. Hi there, Monica. It's so good to see you. Monica's hollering at us from Orlando. Welcome, welcome. All right. The last place I think is Instagram. So let's see. Set up live. The Facebook group. Yeah, start dropping your questions in the chat, guys. We're waiting for a few people to come in and join us. As we wait, I figure why not go live in all the places, my friend, okay? So let's do it. Let's do it. Ooh, interesting. Okay, so we're going live on Facebook. This is good. This is good. We're figuring it out. Going live on Instagram as well. Get the little phone out the way before the editing team fires me. one more place. Let's do it. Post in group. Yep, we're doing it. Live cam. I've got the right mic selected. I think it's looking good. Okay, complete the post details. Let's do that. The actual post, grab that over here, is outsmarting market saturation as a newbie investor. Okay, so would love to know where you guys are zooming in from. I would love to know it. Okay. Did I do it? Did I do it? I'm hitting go live now. Hopefully. Crossing my fingers, crossing my fingers. We're live in all the spaces. I'm crossing my fingers so hard, guys, because last time we had a little bit of an issue with the stream, but I think we're good. Okay, so hoping for the best. Welcome, welcome, everyone. Good evening. Okay, so today I want to talk about something that's really near and dear to me as we are going into 2025. I want to make sure that we are all on the same page, okay? So I've got the right mic. I think I'm good. All right, awesome, awesome. Welcome in, welcome in. Guys, come on in. Come on in. I'm going to paste it in here as well. Let's see if that works. Okay, it's pasting on Insta. I've relinquished any hope that I'm going to get the technology side of things down packed. So, my dear friends, I love you all, but it is what it is. This is my cross to bear, right? This is my cross to bear in terms of the tech kerfuffles and the technology issues. So it is what it is, but we're all okay. We're all good here. I'm not going to be one of those streamers that is like, oh, like fully automated and have a full production team or anything like that, right? It's just me. It's just me here. And we are going to make this as educational as possible. This is not for entertainment. This is primarily for education. So that's the good news, okay? I think I need to open one more place to make sure that I can see any and all the questions that are coming up. I want to make sure that I do that. And then we're going to dive in. So bear with me, guys, if you wouldn't mind just hanging in there. Hanging in there. We're going to get it together. We're going to get it together. My goal is to put this out here. I've got jury duty tomorrow. So I said, you know what? Instead of waiting to put this out here, I'm going to put it out tonight. And then we are good to go. Okay, so it's saying that I am not live in all the places, but it looks like I am. It looks like I might be. Okay, I'm just going to hope for the best. What about that? What if I hope for the best? Let's hope for the best. I see some comments coming in. I see some views. All right. So without further ado, guys, let's do this. Let's get this party started. Okay. Whew. This is a good one. This is a doozy. This is a really, really good one. Okay. So this is something that is absolutely near and dear to me. I want to talk about how we can outsmart market saturation. Okay. So let's begin, my friends. Welcome back, my friends. Is market saturation killing your short-term rental dreams? For those of you who are thinking, you know, is Airbnb dead? Is the gold rush over? Today, I want to talk about how we can spot market saturation. I want to talk about how we can beat market saturation and how we can still thrive in 2025. Ooh, that's good. Thrive in 2025. Yes, let's do that. Okay, especially as a new real estate investor. Now, the last 12 months, I have seen cities flooded with short-term rental properties. However, it sometimes reflected that the rates and the nightly rates were going down and occupancy was going down as well. So is this all doom and gloom? Is this all doom and gloom? Well, let's talk about it. Welcome in, everyone. Today, we are back with the Luxury Rental Doctor Show. I'm Dr. Rachel Gainsborough. I am a former pharmacist turned real estate investor. I'm here on mission to help you build wealth through luxury short and midterm rentals. Now, my personal portfolio spans from Georgia to Florida to Texas, Tennessee, and one of our luxury midterm rentals was actually featured on Netflix. Now, a few years ago, when I was getting started, there was a huge roadblock that I was faced. So many of you might have heard about Airbnb bust, Airbnb saturation. When I first got started, I started to ask myself, you know what? Am I too late to the game? Was the market already crowded? And noticing that everyone else was doing the same generic thing, all the properties kind of blended into one another, I started to kind of panic, thinking to myself, have I missed my chance? Have I missed the boat? And some of you are thinking the same as well. But instead of giving up, you know what I did? I pivoted. I pivoted from wanting to do what everyone else was doing, the generic setups, throwing grandma's furniture, just keeping it as cheap as possible. I pivoted to elevating our portfolio a little bit, going from man property essentially to a little bit more of an elevated stage. So luxury short and luxury mid-term rentals. So I wanted to create spaces within our budget that actually stood out from the crowd. Now, fast forward to today, the results are that my properties, they actually got booked out faster. They got booked out at higher rates than I could have ever imagined. Okay, so let's break down a little bit of what has happened the last year in 2024. And I'm seeing, give me 1 second, I'm seeing some pop-ups and some questions. I just want to make sure that I'm not missing anything. All right, awesome. Guys, just keep dropping your questions and comments in the chat. Give me some hearts, some thumbs up. Let me know that you're here. Okay, so guys, let's break down a little bit what's happened in 2024. So in 2024, what we saw was that property values had skyrocketed. I'm telling you, properties we had purchased for $175,000 in the Poconos back in 2022 are now pushing $400,000, $650,000. What else are we seeing? Well, we're seeing cities like New York, cities like San Francisco introducing really strict short-term rental restrictions and regulations. We're seeing that HOAs are piling on fees as well as restrictions, and we are seeing some community pushback. Let's talk about the elephant in the room, right? There is community pushback. There are some regulatory constraints that are out there that are causing hosts to face just plummeting bookings. They're facing rising operational costs. So that's something that if you're not thinking about or monitoring, that's going to be really important. That's going to be the difference between you making or breaking it, right? In the realm of your profitability. So at the end of the day, I want to talk about, well, what is market saturation? So what happens with market saturation? So if you're multitasking, come back to me. I'm going to give you a few definitions here, okay? So market saturation happens essentially where you happen to have more properties available in the market, more so than the market's demand can support. Okay, so you've got a whole bunch of new properties that have showed up, popped up on the Airbnb platform. However, the demand has either stayed the same or it has decreased. Okay, so recent reports have shown us that in popular short-term rental markets, listings have increased by 30%, but the demand hasn't kept up to it. It hasn't kept up at all. It hasn't, rose or anything like that. So what does that mean? Well, in order to stay booked, sadly, a lot of the hosts and the homeowners, the property owners, they are dropping down their prices. So they're dropping down their prices. We're seeing lower occupancy rate. We're seeing a ton of competition. And there's a term that we have coined. It's called the race to the bottom, literally. Well, figuratively, not really literally, but figuratively speaking, the race to the bottom on those nightly rates. So those nightly rates are bottoming out. Okay. So that essentially is what market saturation entails. Now, what are the keys? As far as the key signs that market saturation is happening. So again, when we see that year over year, the nightly rates have decreased, that's a really big sign that there's market saturation. And oftentimes inside of like local Facebook groups and communities, we see that there's mention of a lot of competition as well. So that's one of the conversations that I often like to take a look at to get a sentiment of the community. However, from a very strategic and objective perspective, I use a tool called AirDNA to analyze supply. I analyze demand. I look at the occupancy trends. I look at the average daily rate over the past 12 months to see if that market is cooling a bit. Okay. All right. So, for example, in one of the cities that we invest in, the occupancy rate was 75%. Okay. Now, that was a couple of years ago. Now it's at about 55% overall in the market. So, depending on how you're running your properties, it can determine like, oh my gosh, this market is in big trouble, right? So think about it that way. So if we see a decrease in occupancy rate across an entire market, that could be an indication that there is some saturation. So when it comes to identifying, well, what can I do to stay above the fray? What can I do to make sure that the buyers or those that are seeking to stay in my property or in a property within a market, what can I do to kind of peacock above the crowd and not, I would say, live in that red ocean where it's a feeding frenzy. We're fighting for our lives. We're trying to get that booking. What I'm not going to do, okay, because I have bills to pay, what I'm not going to do is drop my prices all the way to the bottom, right? That is not a vibe. That's what I'm not going to do. Instead, what I'm going to do is I'm going to research. I need to research my unique selling points. I'm going to research the unique selling points in that particular market. What are some of the things that are drawing in folks to stay in one of those top 1%, top 5%, top 10% properties? And what are the things that I can implement? So for instance, in a mountain market, you have hot tubs, you have amazing views. That's something that you want to make sure that you're looking at from the get-go prior to closing on the property. I love to focus on multi-families traveling with children and pets, honestly. So that's one of our niches. So we like the larger properties because we can draw in as many individuals as possible. So think about it this way. Those really super cute I would say little romantic chalets, they do well. Like those tiny houses, they do well. However, I want to hedge, I want to be that house that the families are traveling to. Say it's an adult family. I'm my own avatar. So if I'm traveling with my husband and his siblings, join us on a trip and their spouses and their children and grandma and grandpa. What I just shared with you here, we have about 8 full-time W-2 earners, a lot of heads that can pay for that stay, right? And so that's why I focus on 4 bedroom, 5 bedrooms and up, because I can host those larger families that are coming together for gatherings, a long weekend, weddings. We're hosting a family right now that's coming in for a wedding. So it's like 3 generations of families, the aunts and uncles. So our places are meant to kind of niche down and attract a little bit of a larger crowd, but family friendly, family centered, so that we could leverage the opportunity to have a group split that nightly rate. So if the nightly rate is $1,800 or $1,200, it's not so bad because you have 8 paying adults that can split that amongst themselves. And so the family unit, if they're paying $1,000 for the week, I mean, that's a great deal compared to a hotel where they don't have a full kitchen, they don't have a backyard, they've got all these split rooms, right? It is not a vibe. Okay, so when it comes to standing out from the crowd, again, in a saturated market, it's just really getting specific about your guest avatar and niching down into making sure that you are attracting them to stay in your property. Okay. So, other factors when selecting a property that I've noticed, like for instance, in a mountain region, in the beach region, or a suburban market, it has to do with proximity to those niche attractions. Okay, so what's a niche attraction? For instance, in the mountain region, a niche attraction would be how close are you to the lake or the ski lift? It depends on where this mountain is located, right? If it's a national park, how close are you to the entrance of that national park? Really important, right? So what's your proximity? For me, I have short-term rentals and vacation rental markets, midterm rentals and suburban markets. So in the suburban market, the niche attraction is actually how close am I to good schools? So if a family is displaced from their home and they need a place to stay while their home is being repaired, they want their kids to stay in those same great schools. So, how close are you to those great schools? So, proximity is the key. How close am I to the things, right? Now, I will tell you there's one caveat though. For our beach locations, the closer you are to the front of the water, that's called tier 1, the more money you make. However, the closer you are to the front of the water, the more expensive those properties are. So it's a balancing act. I like to be like tier 3, tier 4, because I'm not paying $20 million to be like on the water, but I will pay $600,000 to be behind the guy who's behind the guy who's behind the guy and still generate like $173,000 a year on those properties. Okay. So I want you to think about that. So proximity is key. From there, amenities. Let's talk about amenities, amenitization. So I mentioned a little bit earlier, we invest in markets where there are mountains and markets where there are beaches. So what are the amenities that are important to that person traveling to that area? So in our mountain regions, it gets really chilly. They love a good hot tub, right? So you can do a quick search on your phone to see what is drawing people in. A hot tub is, you will get back a 30% increase in revenue if you place a nice hot tub at your property. So it is worth the $5,000, the $8,000 to invest in that hot tub. We see the ROI time and time again for those who are like, excuse me, I don't know why I'm coughing. So we see that ROI time and time again. For those who are thinking to themselves, well, I already spent money on a down payment, I'm not going to spend money on a hot tub. Guys, you are kicking yourself in the foot. Okay, you're kicking yourself, you're kicking yourself, you are limiting your ability to profit in those markets. So, what we're talking about today is what are the strategies to make sure that I stand out from the crowd? Well, that is how you do it. Amenitization is key. Okay, and so from there, the quality of the property, the quality of the finishings, the quality of the design, adding a little bit of a Instagram worthy element, such as a nice little, I would say, wallpaper or a feature wall. Some of those elements are amazing. If you have it within your budget, say year one, you did not make what you were expecting to make. So I have some members of our community, they're expecting to make 173,000, but they only hit like 123,000 or so. And so they're looking like, okay, what is missing from this property? Why didn't I make what I was expecting to make? Well, when we look at the properties that are really pushing the envelope, in this one particular market, they have a cute little barrel sauna, right? So now let's think about, well, let's add a barrel sauna so that we can continue to increase our revenue potential. In one of our other markets, we just that we're launching, we added a pickleball court, right? So that's pretty expensive. I think it costs us about 22,000 to add a pickleball court. So that's pricey, but I assure you we are going to make that money back, okay? So that is your quality. Actually, that's your competitive edge. Or is it quality? That's a good one. It's kind of a little bit of both, right? You're adding a little bit more to the property, you're elevating the property, you're creating more of an upscale stay by adding the pickleball court, by adding the what else do we add? A little bit of putt putt, a little putting green. So that adds to the element of an elevated stay, a little bit more luxurious. That is more in our vacation rental markets. Our midterm rental markets, again, we host families who are displaced from their homes due to disaster. We don't need all of that. It's cute to have a really nice pool table, little what do you call it? The thing like you're like kind of playing soccer, but you're not. Not air hockey, guys. I'm drawing a blank. I don't know. I don't know what it's called. So the kids like it. They're like rotating, and then the little ball goes here, there. So we add those to the foosball. Thank you, Jeffrey. I'm like this and this and this. So yes, add a little foosball. They love it. But in those markets, guys, when you are hosting families for midterm rentals, these are month to month rentals. The biggest amenity that could draw in the revenue is having the home fully furnished, fully equipped. Is having a master bedroom on the main or some type of bedroom on the main, because a lot of times the families that we are serving in certain markets, they have elderly parents who have mobility limitations. They may have a special needs child, right? So by you ensuring that, okay, this is a property, I'm thinking about who it is that I want to serve, I'm thinking about how I can stand out from the marketplace. We're always looking for properties that have a bedroom on the main and a full bathroom on the main. If there's not a bedroom on the main and there's a half bathroom, we have actually converted, got it permitted, converted to a full bathroom, adding a little stand-up shower situation. And you know how those a lot of those colonial homes, they have so many little living rooms and nooks and crannies. We'll convert one of those to a bedroom in a heartbeat, okay? So don't think that because I'm talking about pickleball court or swimming pools or these types of amenities, those are the amenities that are a requirement for all markets. Again, understand who it is that you're serving, okay? We also serve the film industry in certain markets. That is another midterm rental niche audience that we serve. So for them, they are just looking to be in close proximity to the studio where they're going to be filming in. Okay, so that's in our Georgia market. Okay, so hopefully that makes sense, guys. So just really wanted to jump in here and share with you what are some of the ways that we're standing out from the crowd. Again, looking at emerging markets is a huge deal. Emerging markets, we love to invest in secondary cities, so we're not in the the hustle and bustle of major cities. We like to go into the secondary cities that are near the major cities because we are attracting a huge audience. So I will tell you, whenever I see a new hotel being built in a particular market, I take heed. I take heed. I take heed, especially if it's a Residence Inn, like one of those like fully stocked hotels with like the little kitchenette, the full kitchen, or kitchenette rather. Let's call it a kitchenette, where someone can stay there for a month. They can cook. When I see they're standing up those types of hotels, that is a key indicator to me that wow, okay, they have done a ton of research on travel patterns and they recognize that something is amiss, something is going on. So I will tell you, in one of the markets in south of Atlanta market, we I see that they're building these hotels, the Residence Inn, and so on and so forth. Well, as they were doing that, next thing you know, we get an announcement that the U.S. soccer is coming to that market. So they're welcoming U.S. soccer. I'm like, aha, that is why they are building more hotel accommodations in that particular market. Okay. So my encouragement to you is, instead of like going for the big cities, look in the secondary markets outside of those cities to figure out what opportunities there are. Okay. So I do love me a good short-term rental, vacation rental market. My next recommendation for you is to divert, can I say it right? Diversify your strategy a little bit. Think about midterm rentals, okay? So, for those of you who are not aware, midterm rentals are furnished accommodations, furnished homes, furnished properties that you can rent out month to month. So, 30-day stays, whereas long term rentals are unfurnished homes that you can rent out year round for a year unfurnished. Midterm rentals are furnished that you can rent out month to month. And for those who aren't aware, short term rentals are kind of like Airbnbs that are furnished homes that you're furnishing and you're renting out like 2 nights, 3 nights. Okay. So I loved my pivot to midterm rental when I started to get introduced to it by getting inquiries from the insurance company. I love a good midterm rental. So I would say most of our portfolio are a hybrid. So midterm rentals for the most part in our suburban markets, and we'll fill in the gaps with short term rentals. Not a lot of people know how to do this. And so this has kept us out of the saturation fray. We are filling the gaps with short term rentals, but we're primarily midterm rentals in our secondary markets, in our suburban markets. Okay, so this really helps us out a lot. Again, it's a corporate housing model. We're working with insurance companies. We're helping families who have encountered some type of disaster. They're displaced from their homes and they're able to stay in our home while their home is being repaired. Okay. So, really, really great pivot. If you're in a market that you're thinking to yourself, okay, there's a lot of competition. How do I set myself apart? Think about setting up your property as a midterm rental as well. We have a separate listing that we use as a midterm rental to make sure that we are attracting those corporate housing agents, temporary housing agents. Okay. So this helps us to create a whole different revenue stream that initially we were not aware of. Okay. So hopefully that is super, super helpful. So I want you to think about it this way. Start asking yourself, you know what? What is my competition doing in this market? What is my competition doing? Okay, I'm seeing questions. Hang on one second. Awesome. Keep asking your questions, my friends. Keep asking your questions. I love it. Okay, so I want you to start with these questions. Ask yourself, what is my competition doing? And then ask yourself, how can I zig when everyone else is zagging? Right? So, most individuals, like I said, it's a race to the bottom. They are just dropping their prices. They're dropping their prices. This is not what we're going to do. We are going to figure out who else we can serve in the marketplace. Okay. So, those are the initial questions that I want you to ask yourself. From there, I want you to think about your budget. Think about your budget. Build your budget around your worst case scenarios, right? So for me, I want to see my best case scenario. I want to see my the most realistic scenario, and I want to understand my worst case scenario. So it's important to know, well, what is your break even point at 50% occupancy rate to make sure that you're accounting for any additional increases in operating costs. Okay. Having that multiple revenue stream, I call it like multiple revenue stream strategies when it comes to short term and midterm rentals. That's pretty much two revenue streams that I'm running out of a single property. I think that is another great way to mitigate risk and to overcome saturation. And I want you to think about your seasonality. Do you have seasonality? Do you have fluctuations? Think about that in your projections as well. Okay, guys? So hopefully you're taking some notes and you're looking at this exercise and you're being really intentional and realistic about what the numbers are looking like, because it's oh so very important to look at your numbers. So the golden age of basic Airbnbs are over. But that's actually good news for new and smart investors. Success now really depends on finding the right property at the right price. It depends on understanding what amenities guests truly want. And it really depends on delivering amazing customer service. So I would love you all to drop a comment below. Ask your biggest questions about market saturation. And don't forget, we are working on my top 75 cities with the highest profitability for short term rentals. All you need is to go to 75gems.com. It is absolutely free. Go ahead and grab 75gems.com. That is my free guide for spotting the best short term rental markets. Remember this, guys, even in crowded markets, there is room for you to innovate. The key is doing your homework. The key is staying ahead of the crowd and making sure that you're serving your customers. You have decided who you want to serve. You've decided who you want to serve, and you're serving them at the best and the highest possible level. All right, so that is all for now. Goodbye, my friends. If you have any questions, drop them in the chat. I will be addressing all of those throughout the next few days. I do have jury duty tomorrow. I so appreciate you being with me. Thank you for joining. Bye-bye for now.